This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Dutch and British wholesale prices were largely flat on Tuesday morning as comfortable supply offset higher demand, with Russian gas flows via Ukraine stable and more liquefied natural gas, LNG, cargo arrivals scheduled. The benchmark front-month contract at the Dutch TTF hub inched up by €0.10 at 47.17 euros per megawatt-hour by 0959 GMT. A fresh intraday high since it hit 47.15 euros per megawatt-hour on Friday after Austria's OMV announced Russia's Gazprom would suspend its gas deliveries to the company. The British front-month contract was down 0.70 pence at 118.00 pence per therm, while the day-ahead contract was down 0.25 pence at 118.75p therm.
Oil slipped on Tuesday pressured by the restart of production at Norway's Johan Sverdrup oilfield, although investor caution arising from fears of an escalation in the Russia-Ukraine war limited the decline. Equinor has resumed partial production from the oilfield, Western Europe's largest, following a power outage. An outage at the North Sea field helped prices to climb by over 3% on Monday. Brent crude futures were down 45 cents, or 0.6%, to $72.85 a barrel by 0915 GMT, while U.S. West Texas Intermediate crude futures slipped by 46 cents, or 0.7%, to $68.70.
Moving on to the top news in the energy sector.
U.S. crude futures flipped to a Contango structure for the first time since February on Monday, with West Texas Intermediate for January delivery trading at a premium to the December contract in a sign that supply tightness is easing. The discount for front-month U.S. crude futures against the second-month contract widened to as much as 5 cents during the day. The December contract is due to expire on Wednesday and the market is eyeing more supply. Under a Contango structure, traders are betting oil will fetch a stronger price in the future than current spot prices, justifying the cost of storage.
Production at Kazakhstan's biggest oilfield Tengiz, operated by U.S. major Chevron, has been cut by 28 to 30% due to ongoing repairs, the country's energy ministry said on Monday. As a result, oil production has decreased to between 61,000 and 63,000 metric tons per day. The ministry expects the repair process to be completed by November 23 of this year. Next, we have the top news in metal markets. Gold prices climbed for a second straight session to hit a one-week peak on Tuesday as the U.S. dollar pulled back from recent highs, while investors awaited comments from Federal Reserve officials for clarity on interest rate cut policy. Spot gold rose 0.3% to $2,619.50 per ounce by 0829 GMT, the highest since November 12. Prices gained 2% on Monday, recovering from a two-month low hit on Thursday. U.S. gold futures added 0.4% to $2,623.70. The selling has run out of steam and that's attracting those potential buyers sitting on the fence waiting for the market to stabilize to get back in, said Ole Hansen, head of commodity strategy at Saxo Bank.
Iron ore futures rose for a second consecutive session to a one-week high on Tuesday, supported by a weaker dollar and the start of restocking by Chinese steelmakers to maintain production in January. The most traded January iron ore contract on China's Dalian Commodity Exchange ended morning trade 3.05% higher at 776 yuan, $107.17, a metric ton. It hit the highest since November 11 at 779 yuan and 50 fen a ton in the afternoon trading session. The benchmark December iron ore on the Singapore Exchange was 2.02% higher at $101.15 a ton, as of 0717 GMT, after touching the highest since November 11 at $101.90 a ton.
We will now look at the top news in the agricultural sector.
Ukraine's wheat harvest may increase to up to 25 million metric tons next year from an expected 22 million tons this year thanks to a larger sowing area, the first Deputy Agriculture Minister Taras Vysotsky told Reuters in an interview. In the first official forecast for next year's harvest, Vysotsky said the sowing area could reach 5 million hectares in 2025 versus 4.6 million in 2024. Ukraine, a global major grain grower and exporter, used to sow 6 million hectares of winter wheat before the Russian invasion in 2022 but reduced the area sharply after large areas have either been occupied or mined.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.